So it's barbecue season here in Las Vegas. Just kidding. It's barbecue season all season long, all year long here in Las Vegas. And the weather has been cooling down from the 100s now to the 90s. But most importantly, is the real estate market slowing down, our home prices coming down, and our interest rates coming down. A lot more to that on the real estate market report and the podcast in a little bit. So, is the real estate market coming down? That's the question. Is the real estate market slowing down? What do you guys think?
That's a good question. I'm kind of guessing it depends on how the interest rate's going to go, especially today's the federal, what do you call this? For them to decide again, right? It's another meeting for them. So if based on the market report, we, as far as for the list, the prices did go up, but compared to last month's, right? It went up by how many percent was that? 0.7%?
The prices.
The prices did, yeah.
Well, it went up from last year. It went from last month. We were at 485,000 average price of unit sold. Now it's 480,000. So that $5,000 difference is really very insignificant. But if you see Las Vegas Review Journal or Fox 5, they're saying it's coming down, like the prices have come down when it's really not. It's really insignificant. $5,000 is very, very insignificant at this point.
Yeah.
So yeah, 400. It went down from 485,408 in a span of a month. From last year, it went up. Last year it was about 477,000. Now it's 480,000. So it still went up by a year.
Yeah, it's still up about 7% if you compare that to last year.
Yeah.
I think one major factor right now is the inventory. We have more inventory right now. Effective availability is at 3.9 months, so we got to look at that as well. Obviously, if there's more houses that are listed and is sitting on the market, those sellers might be able or might have to lower their price. That way they could sell it. So there is a lot of listings that are sitting right now because of pricing, and I think it's just a matter of time where when the interest rates actually goes down below 6%, maybe if that's something that is normal, I think a lot of buyers will be coming out again, and then I think prices are right now are stable, though buyers have a lot of leverage to negotiate pricing, negotiate concessions, and all of that. So
would you guys say that we're in a balance or more of on the buyer's market at this time?
I would say it's still a balanced market. So a good thing with buyers now, they have a lot of options. And that's what we tell our sellers. Like because we have a lot of inventory, the buyers they do have a lot of options, and they're trying to get the best deal on the market. Like flip it if you were the buyer from the seller on the buyer's perspective. That's how we price out your home right now, because it's still not which is still a healthy market for me. I think that's how the market really is.
Yeah.
So as of time of recording, the federal board are having a meeting right now where they're expecting rates to be cut down. They have started rates coming down already. Right now, rates are just below 6. Which has been the lowest it's been in the past 12 months.
For FHA, right?
For FHA.
Yeah.
So one of the lenders is saying it's probably going to be a refi boom sometime. And of course, if there's a refi boom, there's it also just a little bit of percentage down will increase the buying power of a buyer, so they can afford more. So there's more buyers coming into the market. If they continue to lower down interest rates, then we're going to expect that. We just don't know when it's gonna come down. No one could say, but it's definitely good for both buyers and sellers for the interest rate down for the interest rates to come down a little bit. And what causes interest rates to come down in the first place?
Unemployment?
Yes.
Unemployment. Is it the bond market?
10-year
Spots.
treasury bond. Yeah. So for unemployment, it's inversely related. So the higher the, let's go for unemployment rate past 5 years. So back in 2021, unemployment rate was like close to 9%.
Yeah.
And now it's about 4.3% for September
So they've
2025.
gone down.
When unemployment rate was high, what happens? The economist was also not doing really well, and the economy is volatile. So the Feds would lower down interest rate to stir up the economy,
Yes.
and the so that's unemployment. They're inversely related. How about 10-year treasury rates? So 10-year treasury rates, they are directly related. So when tenure this the treasury rates is how is it tells how it gives an idea of investor confidence in the U.S. For U.S. bonds, right? So back in 2020, the interest rate, the 10-year treasury rates was only like 0.5%. And you can see the interest rate was like so low, like 2%. But now it's at 4.6%. So interest rates also high. So
So it correlates with that.
another indicator would be inflation. So inflation rate, I mean. So inflation, when you say this is the rate of how much the prices of goods and services increase. So our current inflation rate is, I believe, 2.3. No,
Yeah.
no, 4 point
Is it a
something percent.
4.6?
So if inflation is high, that means prices are going up
Faster.
fast. They're gonna keep interest rates high.
Yeah.
But if inflation is low, am I saying that right? Yeah. So
Yeah.
yeah, that's true. So if inflation is up, they're gonna keep interest rates up too,
Why? Why would they want to do that at the same
to
time?
prevent people
Spending.
from spending so much.
Because
see.
when you spend too much, it creates demand, and when it creates demand, um, supply might not last. So when it creates demand, pricing stays up.
I see.
Right? Does that make sense?
Yeah. Yeah.
Right.
Okay.
So that's that. And but there's also politics involved. I don't know. I mean, there's some might say it's politicized why they're keeping interest rates high. And that sucks. But that's the government, so
Yeah. It seems
can't
like
really tell.
they're saying that the economy is good.
Yeah.
Right? Is that right? I mean,
Well, it is. It is.
Yeah.
I don't think the economy is bad. That's
Yeah.
the thing. So but that's for interest rates. If the interest rate goes down, then you're gonna see prices going up because demand gets higher.
Yeah.
And so far, even with interest rates on the 7s and 6s, the past few years, in prices have been steady. So that means that the demand is still there, it's still big. So just a little bit of drop on those interest rates, you're gonna see inventory going down
Yeah.
quick.
Yeah. So I guess we have a lot of buyers that are waiting for it to go down. But not only that, we also have a lot of investors waiting for it to go down
Yes.
as well. So now the problem is once the interest rate drops, now our buyers are going to be competing
Mhm.
with the investors as well. Kind of like what year was that? And when the interest rate dropped, everybody wants to go. Everybody wants to
that was
buy.
during the pandemic.
Yeah, during the
Yeah.
pandemic.
As this is we have a small valley over here, but we have a lot of investors,
Yeah.
both local and international investors coming into Vegas. And that's the thing. If they're competing with our current primary home buyers, but that's the that's the market really. So
Yeah.
so
That's the thing too, because investors comes in with a cash. They
Yeah.
they're cash buyers, and
Yeah.
Usually they can, they can close in 2 weeks compared to a traditional, our first time or our regular buyers that come in at 30 days close, 45-day close. And
Yeah. So in that case, what do you say to home buyers now if they're looking into buying their house?
I mean, I advise my clients that if they're ready to buy today, to go ahead and step in and buy today, because there's a lot of options. First of all, as a buyer, you have a lot of options. You have a lot of homes that you could look at in across the valley. Sellers tend to negotiate better today. You can ask for concessions. Of course, it depends on the pricing of the property. And when when rates actually goes down, a lot of more buyers will come out. And if there's a lot more buyers that comes out, then there's more competition for the buyer as well.
Yeah.
And so, I mean, if they're ready now, I think today, like right now, is actually a better time to go out there and start looking and start making offers.
Yeah.
Even for investors, actually.
Definitely.
Yeah, even for investors. I mean, if you
There's
have
still deals out there. You're competing with a
Right.
lot, but there's deals
yes,
to be.
there's a lot of
yeah.
deals out there for
Yeah.
investors,
Mhm.
especially if you're cash ready. I mean, you could use that leverage right now to purchase one or two properties if you can. But yeah, I think once that rate goes down and
It's going to be a lot of
a lot of
competition.
buyers, a lot of
Mhm.
people moving here from states that has more equity.
Yeah.
So
Yeah.
there you go again, right?
And I think they're
I
waiting.
doubt it's gonna be the same like 2021,
No, I think it's gonna be a lot
2022,
more
but
control.
yeah, it's gonna be a lot more control.
I don't think rates will ever go below 2%
Yeah.
in a long
Yeah.
time.
But still, I mean, as a first time home buyer, especially, if you guys could qualify now and get into a
Yeah.
house, I think you don't want to compete with
Yeah.
investors later on.
Yeah. 'Cause I think timing the
Definitely.
market is just really that's not, no one could time the market, you know. And I think that's the wrong way of approaching purchasing properties. It's like Bill Gates said, don't wait to buy real estate. Buy real estate and wait. No one can predict what the market is doing, but if you need a house, hey,
Yeah.
buy it. As long as you qualify for it,
Yeah.
go for it. Because in the long run, prices are gonna come
Yeah.
up. Like
Mhm.
even the prices during 2006 before the Great Recession in 2006, the average price was 330,000. Now the average price is 480,000.
Yeah.
Yeah.
So in the long run, prices will still go up because labor goes up. There's inflation.
Mhm.
So if you can qualify now,
Yeah.
get the house that you want now.
I think as long as what I tell my clients is as long as they have the budget, if it
Yeah.
fits in the budget, go for it. And then later on, wait for the interest rate to drop. I think after 6 months, they can actually
Yeah, they can
refi if
refi
it go.
anytime. Yeah.
Because then if the interest rate drops somewhat, most of the time the price will go up because because of
Yeah.
the demand. So, but when you buy a house right now, the price won't change. If you buy it at a 400, 480 is their
Correct.
median right now. By the time the interest rate change, if it goes down, the 480 is going to be probably what, 500, 550
Yep.
or so. So,
Yeah. Same with their rent. If they're currently renting after 5 years,
it goes
that
up.
rent
Yeah.
every year, the rent's gonna
Every
be
year it
going
goes
up
up.
10%,
yeah.
20% even. So, but yeah, go for it. So solar, big topic. Right now the big beautiful bill approved, saying that they're cutting solar by the 30% federal incentive for purchasing solar by the end of 2025. So like I said, as of this time, the Federal Reserve are conducting a meeting right now. We got news that says the Federal Reserve cuts interest rates for the first time this year. Federal Reserve on Wednesday announced a highly anticipated interest rate cut move, indicating concerns about slowing labor market now outweigh ongoing worries about inflation. Um, Job gains have slowed and the unemployment rate has edged up, but remains low. Also, nationally, real estate closings have slowed down significantly. Um, and in all parts of the U.S. is probably why they're getting that pressure. So like I said, if you are qualified to purchase property now, go for it. Don't wait for the interest rates to come down. I wouldn't. If
Yeah.
you know, because timing the market is not really the best way to go about. We're looking when buying real estate, we're looking at it in the long term, not this very short term like rate cuts or so. So while it's great that rates can come down a little bit, buy a house when you're able to. Agree?
Agree.
All right. But yeah, that's
That's
interesting.
yeah. So if it goes down, prices might creep back up. So
Definitely,
there you
definitely.
go.
So
Yeah.
back to the topic of solar. The big beautiful bill says that the 30% federal tax incentive will be going away by the end of 2025. You think that will slow down the solar market?
Probably not in Vegas. You know,
Uh,
here in Vegas, you gotta as soon as you get a new homeowner, the thing, the thing about that we think about is summertime. That's when we crank up our AC.
mhm.
You know, unfortunately for our place and my household, we're looking at like 500. You know, every single time summer hits. So the solar looks really good, but now, going back, you said it's gonna be cut off starting. The last time is gonna be this
Yes.
December.
Yes.
Does that mean we have to be under contract on December, or
No,
it
it
has to
has
be
to be
installed
installed. That's why solar companies they're not accepting anything after October 31st.
so that they can meet that
So they
demand
can
by?
meet that demand. So the
Oh.
earlier it is, the better. However, is it really the best? Is solar really the best way? Is the best option for every homeowner out there?
I don't know. I'm not really a big fan of solar right now. As
too.
of
We
right
are
now,
not.
Wait,
As
as a
if we're
homeowner
selling,
or as a
yeah,
realtor?
as a
as
homeowner,
both.
both. Yeah,
Both.
yeah.
Yeah.
I would say both because
Oh yeah. Oh,
selling a
sorry.
solar that's not paid off could be a challenge.
Yeah.
You know,
Yes, it is.
because
Yeah.
the buyer, if it's not paid off, the buyer has to assume that
Yeah.
liability. They have to
Mhm.
assume that monthly payment, and that's the thing. It can affect their debt to income ratio.
Yeah.
Yes.
But when would solar work for someone?
I think for me, what I would do personally is if I get solar, I would just do the PPA, honestly.
Power purchase agreement.
Yes,
Yeah.
it's a power purchase agreement. So it's kind of like a lease, but it's I think it's a much cheaper alternative to
Mhm.
like either owning or leasing because you only pay for the power that you
It
use,
generates.
and it has a some type of like a elevator clause or
Yeah.
escalation clause. You just have to look at that because
Yeah.
that's the part where every year it will go
It
up
will
by a
go
certain
up.
amount.
Yeah.
Mhm.
But I think it's easier if you do want to sell your house later on in the future.
Yeah.
I think it's easier for people to actually assume that.
Yeah.
Because there's
It's not a
really, there's
finance.
only, I think time that's tied to it.
Yeah.
Another thing that's beneficial about a PPA is that they actually take care of the panels.
Correct.
Because it's still theirs.
Yeah.
Mhm.
So, you know, if anything breaks on the panels or even the inverters,
Mhm.
they take care of that for you.
But
Yeah.
isn't financing the same way?
Um,
Don't they do that?
I think there is some
They have
type
a
of
warranty.
yeah.
They have a
Mhm.
warranty. But then if they close down, like if solar company closes, no one will. Maybe the manufacturer warranty, but like
Yeah.
Titan
Yeah.
Solar, something like that, they can't service your thing.
But I think there's only a penalty where you pay to get out of the
Yeah.
the time
To get a
contract.
And
The contract.
regarding, I did have a client who negotiated the increase of the power purchase agreement because they said 3 to 4% because of inflation is
Mhm.
what is what
Is it?
is the reason. But my client was able to pay a certain amount of money and make it just fixed.
Oh, nice. Okay.
Yeah.
Oh.
But yeah, the good thing with power purchase agreements that hey, if the solar is not working, I don't need to pay it.
Yeah.
Okay.
Yeah.
Yeah.
Yeah. And power purchase agreement is not going away until 2027, according to
Oh,
a solar
okay.
company installer. I assume.
Wait. You said it's going away,
Yeah, it's
Oh.
it's staying until 2027.
Yeah.
and then they
Wow.
won't. Then they
Yes.
won't offer that
Yeah.
anymore.
Yeah. And there are still and the federal what you call it, the federal interest, what you call it, the federal rebate is not going away with commercial buyers.
So only for
Only
for
residential.
residential.
Yeah. And well, when is solar beneficial? I would say I had a client who asked me that. She was asking me about should I get solar or not. And I would say it depends.
Yeah.
So take a look at your power bill. So let's assume you're going to purchase the solar cash,
Yeah.
right?
Mhm.
So let's say your house is 2,000 square foot house, 4 bedrooms, and on average you are paying a month. Let's say the average for the month is like what, 250.
Mhm.
That's
a lot.
That's a lot. Let's say it's two. Let's say it's 200, 200 a month
Okay.
average for the whole year, right?
Okay.
So 200 months is like $1,200 a year. Now it's
24.
sorry, that's why I became a nurse. Not so 200 a month times 12 is $2,400 for the year, right? But let's just say, okay, the power increase. Let's gonna compare it with how much the panels cost, right? So let's make it, instead of 200, let's make it 250 to adjust for the increase. 250 plus NV Energy is going to be increasing further. They're going to have another charge that's called the demand charge. So demand charge is for the there's 15 minutes of the day where you're using the most power is going to be added to your bill at the end of the month. So let's say from 5 o'clock to 5:15 p.m. You're using the AC, you're using a lot of power in your house, and that 15 minutes it was costing like $1. They're gonna add it additionally to your monthly bill. So in the span of like 30 days, let's say for $1, you're gonna add $30. So let's add that to the 200.
280.
So
From 250, right?
let's say so 250. So in the span of so times 12, that's $3,000, right? So in 10 years, that's $30,000, right? So let's say the solar panels would cost, I don't know.
40 grand.
Now it depends on who the solar company is. Like, so you have to talk to a lot. Let's say it's 40,000, right? So that means 30,000, so 40. So in 10 years, you would have if you install the solar, you would have saved in 10 years. You would have saved 30,000. So how much is that? So in thousand. So in 15 years, you would have saved 45,000. So in 13 years, save 39,000. So let's say it's after 13 years is when let's say the cost was let's say the cost was was 40,000. You would have you are at break even at 13 years. Are you gonna stay at that house in 13 years? That's the question. Yeah, right?
That's the question.
Are you gonna be staying in that house
And-
for 13 years?
And that's not included if the warranty's already done, because they only give what? How many years for warranty?
Oh, yeah, 20 years.
20.
Let's
Oh,
say,
20
yeah.
years? Okay. So what?
Yeah.
But the inverter is not 20 years.
Oh, yeah. That's not.
Yeah.
Yeah.
Well, here's the thing too.
The cost of owning it, like you have to have pigeon guards, you have to have at least once a year get someone to service it and power wash it.
No, but that is correct. But NV Energy, the rate that they have right now, it's not going to stay for the whole 10 years. Later on, they're going to start coming in. Probably, so now they're coming up with the demand.
Yeah.
And then next year, they're probably going to come up with something else.
Yeah.
Or they're going to increase. So by the 10th year, we're probably paying more. But it is true, though. Are you going to stay in that house
for 13 years.
for 13 years?
Because it's only on the 14th year that you get to
That you
enjoy
get
the
to-
benefit. Like
yeah.
they say, oh yeah, it's break even now, you know?
But how about if you did?
About yeah, right? Yeah. So that's the question. So if you're only gonna be staying there, you think for like 2 or 3 years, don't get the solar because once you got the solar, then you're at negative.
Yeah.
Then the buyer is coming in would say, "Hey, you have $30,000 balance on your solar panels.
Yeah.
I'd like to offer, but minus 30 grand, or you give me incentives, or you give me like 20 grand. So that's your loss as a home,
Well, unless it's paid off.
unless it's paid off.
Yeah.
But then even if you paid it off, that's money lost already. Yeah. So even if you, yeah. So it's not for every homeowner, but you do have to do your math when you're looking to install solar panels on your house.
I think if you do purchase it like cash,
Yeah.
I think it's
Makes
it makes sense.
Yeah.
You'd have you'd have more benefits. But if you do loan it, I think
Yeah. Because there's the interest.
correct, and there's the interest, and then you're paying. It's the same thing.
Yeah.
You didn't really save anything, and then the solar is tied in with the house. So when you try to sell it, honestly, I have a listing. I just had a listing not too long ago. Um, they were gonna assume the solar, no problem. The buyers got approved, or got approved for the loan for the mortgage already. But then the solar company demanded that the solar be paid. They didn't wanna transfer it over. See, that's another thing. Like, even if the buyers qualify
Yeah.
Yeah.
to assume the solar servicer still has the right to say no to that.
Correct.
And so that's one of the challenge
Yeah.
of,
Yeah.
of getting a solar, and
And
the op-
having someone assume that.
Yeah.
Yeah.
correct.
So
Yeah.
the only is that you have to pay if you have enough equity in your house.
You know.
Good for you. But
Yes, but if you don't,
if you don't,
even if you
yeah.
do have enough equity in your house, you're still losing that money.
Yeah.
Yeah.
You're losing. Imagine you're losing $30,000 off of a sale of your house.
So talking about that, the one that you sold, the one that I sold, the solar company only wants one of the. So if a husband and wife is buying the house with a solar, the solar company, I don't know which one, who's a loan in this one or who's a solar. They only want one. So it's either the husband will qualify
Uh-huh.
or it's either the wife will qualify, but they wouldn't
Yeah.
qualify both to assume the solar. So then that makes it hard again, because then
because if the first one that applied has
yeah, right. And then let's say, let's say if the wife can qualify, then they go into the next one, and the husband can qualify.
Yeah.
Then it's bad. And
Yeah.
I think with the way that the market that we're in right now, most of our buyers want
Yeah.
a fully paid solar coming in. I mean, there are still some that would assume,
Yeah.
but most of the ones that I have
Yeah.
a sister right now.
payment.
Yeah.
Or not at all. And then
Exactly.
and good luck getting those solar panels off the house. So I would
Right.
say for everyone like looking to install solar,
too.
look into the contract. Like if you sell it later on, 'cause no one could predict if you're gonna sell it in
Yeah.
this amount of years, unless you're paying it cash. Sure.
Yeah. Please research the company.
Yeah,
before,
research the company.
Before
Really look into that contract and if the solar agent is telling you that you could take it off,
No.
I've never seen a property where they took off the solar companies or they transferred it because
Oh,
there's
it's ridiculous.
Yeah.
I heard this too, that if they buy another house, they can take that solar panel from the house that they
And
sold
move it to another-
and move
Yeah.
it to the other house. It's
Yeah,
like,
and then we discussed
no.
that with the solar installer. There's like no way.
there's no way.
Because all of that is permitted. All of that is custom.
Yeah.
There's no way.
There's no way.
So yeah, that is solar. But if you do want to, if you still want to take advantage of the federal tax credit, 30% federal tax credit, especially if you're purchasing cash, let us know. We have local installers at the ready that are
Credible.
that are getting busier right now. Very credible, and let us know, and we will hook you up with them. All right. So, anything else?
No.
Nothing, right? Well,
Yeah,
now we just got the breaking news. So
we have the
let's see how
breaking
that
news. Yeah.
Yeah.
goes.
So what do you think? What do you think the rate cut would do to sellers?
They'll be happy. They'll definitely be happy right now.
Seller would lesser time in the market. Definitely. Yeah.
Yeah, I mean, right now, I think
What's
the
the
average home, I think there's only 59%. The
Selling
time
in
on
the
the
first
market.
30 days.
Yeah, selling the first 30. I think it's only like
Yeah.
59% now.
Yeah.
It used to be like 92, 95%. Yeah.
Yes.
But what's our average days now though?
Average days in the market, I would say for the average price, it's like it's normal for houses to be in the market for 2 to 3 months.
Yeah.
Yeah.
3 months.
Yeah, that's really. I mean, you go back into history. That's really how it is. People can be on the market for years, and that's
Yeah.
and that's it. There's nothing. It doesn't mean there's something wrong with the house,
Yeah.
but it is important still to price it right. Because if you don't price it right, if you overprice it,
It's gonna stay.
then it's gonna stay a lot longer than the normal price market. So that's our podcast today. I hope you enjoyed and learned something. If you have any questions with real estate, just let us know. Shoot it in the comments, and Jose will answer it for us. But I'll see you on the next podcast. I'll see you in the next video. You guys have a great day.
Later.